please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report, 12 noon, halfway through the trading session. I am Reema Tendulkar. With me is Nigel D'Souza. And for the benchmark indices, higher by close to about 0.25%, recovered a bit from the lows, at least in the last 1 hour or so. So for the Nifty, it's a recovery of close to about 35 points from the lows. And the mid-caps, which were underperforming till yesterday, are in top gear. So the mid-cap index is now up close to about 200 points, outperforming the benchmark indices. Positive advanced decline ratio. Pharma is doing well. Oil marketing companies are higher, while HUL is a drag.
That's right, Reema. You know, if you just take a look at it, the advanced decline ratio as well, briefly at around 10:30 a.m. to around 11 a.m., we saw more number of stocks that were declining in comparison to the number of stocks advancing. Now, yet again, we have more number of stocks that are advancing, so that's pretty good news. And in the last few trading sessions, we have seen that the mid-cap index has been a relative underperformer. I think the mid-cap index is on a losing streak for the last 3 to around 4 trading sessions. So good to see that that index as well is bouncing up. Asian markets, you had the Hang Seng as well as the Shanghai market, both of them were down between around 0.8% to around 1%, while the Japanese index, that was closed yesterday, so that in fact is bounced up. That's up close to around 100 points. So given the Asian markets setup, it's good to see that the Nifty has bounced back, because both those two markets, that's the Shanghai as well as the Hang Seng, they're down between 1% to around 1.5%. We'll talk about that and more. First up,
at 12 noon, we'll get chatting about the stocks which are buzzing in trade. This is our movers and shakers segment with the CNBC TV18 research team. And pharmaceutical is moving quite well. So you've got gains in both Glenmark as well as Cadila. Ekta, the news?
Well, it is 2 US FDA approvals that both these stocks are respectively reacting to. So for Glenmark, it is a cholesterol drug that they've received approval for. It's a well-called generic, and it is basically around $75 million in terms of sales that they have for this particular drug. So Glenmark can probably make up to around $40 million on an annualized basis if in case there is limited competition. As of now, Glenmark is probably one of the first generic companies to receive approval for Welchol in this form that they've received approval for, since it's a solution or oral solution that they've received approval for. For Cadila also, they have received approval for basically a drug that fights bacteria used for acne, which is clindamycin phosphate solution. So that is also positive news coming in for Cadila. Though, you know, it's expected to be normal course of business, it is definitely a sentiment boost.
okay, all right, thanks so much for that, Ekta. Well, let's hop across to Mangalam. He's covering the biggest loser on the Nifty actually, Hindustan Unilever. Mangalam, we warned us this morning. It met expectations but didn't beat expectations, and valuations as well were lofty. Take it away.
Absolutely. Valuations were lofty. The results met expectations. No complaints out there. 12% volume growth is what the street was working with. 12% is what Hindustan Unilever delivered. The EBITDA was also a little higher than expectations. The net profit absolutely in line. Now there are two questions. One, with 12% volume growth, this marks the third quarter of the company in a row with double-digit volume growth that came in off a low base. So going forward, is the volume growth going to taper off given the base increases? Secondly, gross margins improved, ad spends increased, and EBITDA margins improved. However, the company said input costs are increasing, competitive intensity is likely to pick up. So in this environment, are they looking to hold on to their pricing power and hold on to the margins? So these are the two questions that warrant an answer. As far as the valuations are concerned, over the last 3-4 quarters, the stock has been trading at a record high ahead of numbers, and the case was pretty similar yesterday as well. 52 times 2-year forward earnings caused a bit of risk-reward concern amidst analysts. The results are in line with estimates, but all of them, owing to these valuations, have reduced their rating or downgraded the stock as far as HUL is concerned. But also wanted to look at all the other FMCG players which are listed right now. As the competitive intensity takes up, just keep an eye out on the other stocks which are trading at a discount.
Okay, business fundamentals are strong, but the stock price may be running ahead of expectations according to the analysts. Thanks, Mangalam, for that. Ekta, back to you, Sun Pharma.
Well, Sun Pharma is in focus on account of Credit Suisse note, where they're talking about MK-3222, or the new drug application that Sun had received approval for in March 2018 from the US FDA, which is used for psoriasis. Now, according to Credit Suisse, the pricing details are not known, but United Healthcare, which which is the insurance company in the US, has classified this particular drug in Tier 4 coverage. According to Credit Suisse, they expect Sun Pharma, however, to make peak volume share of 4 to 5%, implying peak sales of $250 million in the next 3 years. The market size is $7 to $8 billion. 3 drugs are already grossing around $4.7 billion in this category, and Credit Suisse maintains its outperform rating.
Okay, all right. Thanks so much for that, Ekta. Well, back to Sonal then. Sonal, Syntex Plastics, how are the numbers?
Weak set of numbers, Nigel, and that can be seen in the stock price right now. Revenues overall dipped 12% due to weakness in the prefab segment. EBITDA also came in lower, majorly because of weakness in both the custom moldings as well as prefab segment, all this leading to a profit decline of around 47%. Now, if I drill it down to the segments, though the revenues went up by 8% in the custom molding segment, the EBIT, that came in lower by around 12%. However, management says that European operations are continuing the robust growth, and also they are seeing some traction in the US sales. If I go to the prefab segment, the EBIT, that went down by 74%, and management, when they spoke to us back in Q4 FY18, they said that prefab business, that is seeing some stretched working capital because they have a lot of government projects, and this is one of the reasons why there is so much pressure in this particular segment. And right now, after these results, the company is saying that unlocking working capital from the government projects is something that they are focusing on right now. And overall, they have set out a roadmap also for FY18, FY22. They say that they're focusing on an asset-light model. Also, they're focusing more on their retail business. But today, the stock is under pressure. Back to you.
Okay, thanks so much for that. Down today, close to about 6% since the start of the year. That stock has lost nearly 60%, so it's been a big underperformer. Manisha, the big talking point today is the sharp decline that we saw in crude prices overnight.
Well, yes, 4% down in the previous week and 4% down overnight. The last 6 or 7 trading sessions, you have seen the crude oil prices come off by 8% really. The fundamentals are all turning bearish here. One, of course, is the Libyan output, which actually, when they declared a force majeure, the crude oil prices ran up to 44-month highs. But now Libya says that they are going to open 4 of their export terminals, and that has taken the premium off the prices. The other big story, of course, has been US softening their stance on the Iran sanctions. Remember, first one kicks in the month of August in the first week, and the second set of sanctions would come in by 4th of November. But there are some countries, including India, which may not be able to keep these dates, and there are exemptions coming our way. The US officials actually are in India, and those conversations will kickstart in this week itself, and markets would want to keep an eye on that. Apart from that, you also have seen the US output and exports continue at around record highs. India actually has imported around 15 million barrels from US in this year. This is double of 8 million barrels on what we did last year, and we are not even done with the year. We still have 6 months to go. So there are supplies increasing in the market. IMF has warned about the slowing global demand, and that is something that's weighing onto the crude oil prices also. So it really is going to be about sideways to slightly more negative for crude from here on.
Okay, all right. Thanks so much for that, Manisha. Well, back to Sonal. Sonal, let's wind this down. All the stocks in news today.
Well, I'll start with Som Distilleries. That stock is in focus because the board has decided to issue around 12 lakh share warrants to the promoters at a price of around 272 rupees. The current market price stands at around 240 rupees. That stock is in focus today. Adani Ports also is in focus because Adani Logistics and NYK Auto Logistics have announced the formation of Rail Logistics JV. So we'll watch out for what really happens after the JV is announced. Ajanta Pharma, that stock had been under pressure due to news that drug controller has initiated an action against the company, but today the company clarified on this news. They say that the drug controller action is not against the company, but another company called SafeTab, which is the manufacturer of the drug. However, Ajanta Pharma just markets that drug. They also said that the company fully complies with US FDA regulation, and that's why we could see that sharp recovery in the stock today. Back to you.
All right, thank you very much for that. Earlier today, we had the HUL management tell us that how crude volatility as well as the weaker rupee could provide some upside risk to their margins. But Britannia also seems to be echoing the same sentiment. That stock is down close to about 0.5%. We've spoken to Varun Berry, the MD of Britannia Industries, to get his estimate for the input cost inflation in FY19. Listen in to what he had to say.
With the minimum support price increasing, it seems that it is going to be an inflationary balance of year. So I would think that the inflation for our input costs will probably be around 6%. for the balance of year.
Well, and PNB is higher in today's trading session, holding with a gain of around 2.5%. There was a disclosure on the exchanges, and in fact, they are talking about a corrective action plan. Lata is with us. Lata, run us through those details.
Well, first, a lot of PSU banks are up, and that's largely because bond yields have fallen because of the fall in crude prices. When bond prices rise, banks make money on their mark-to-market gains. So that's helping all banks. I'm saying this as a preface because the plan that the government has put in need not necessarily push up the PNB stock, but it is overall positive. Now, the point is PNB, given its March 31st numbers, is in danger of coming under Reserve Bank's prompt corrective action. Actually, risk threshold 2. There is a risk threshold 1 and a risk threshold 2. When your losses are higher and your capital is lower, you go to risk threshold 2 actually, and that's what PNB qualifies. Its capital adequacy, if it is below 10.8% but above 8%, it qualifies as risk threshold 1, and if it is even below 8%, it qualifies as risk threshold 2. That's where PNB's current capital adequacy is. It's, I think, at about 9.2. Likewise, net NPA, if it is between 6 and 9, it's risk threshold 1. If it is between 9 and 12, it is risk threshold 2. PNB's net NPA is 11.6, so it actually qualifies. And that is why the government has put, the bank has put this plan to pull back from all these uncomfortable ratios. Now, the first plan that they are saying that they are going to adhere to is that the capital adequacy ratio will be brought to 10.3%. The first element in that will be that the government will infuse capital. It has said so with, recap bonds plus its own money by about 5,133 crore. That is the expectation. With other things in place, they expect the CET ratio, the common equity capital ratio, to rise to 7.23% against the current 5%, 5.95%. They also expect the net NPA to fall to 5.96% from the current 11.6. Now, why do they expect the net NPA to fall? Both the fall in the net NPA and the rise in capital are because of the following steps that they intend to take. First is that they expect more profit because they will recover more cash from the NPAs. Simply go and seize land, seize property of those who have defaulted. They expect 16,300 crore by way of recoveries against the last quarter's 4,400 crore. They expect operating profit to improve to 3,600 crores and further to 21,000 crores in the full FY19. In the June quarter, of course, it will be a net loss, although if it may be an operating profit, it is expected to be a net loss. But by the first half, they expect to return to profit. That is by the second quarter. So the target of the gross NPA is expected to come down from 86,000 crore currently to 65,000 crore. Now, in this, their big help will come from the assets that are getting resolved in the NCLT. Remember, there's Bhushan Steel, Bhushan Power, SR, all of them when Tata Steel paid back the money for Bhushan. Likewise, they're expecting monies to be paid back by Vedanta or whoever finally wins Electro Steel. So that money is expected to fetch them about 17,000 crore. There are 30,000 crore. They won't get the entire money back, but they will get back 17,000 crore. So that will bring down the gross NPA number. And then, of course, they expect to monetize non-core assets. They have a whole host of assets. Of course, the most famous is PNB Housing, but they also have holdings in NSC, in several credit rating agencies. They hold UTI. UTI Mutual Fund is held by several banks other than T-Row. So they are expecting to monetize that by the fourth quarter, hopefully if UTI lists. So all that is expected to bring some money. Plus, they are expecting to restrict their advances. All PCA banks have to restrict their advances. So they will restrict their risky advances, as also cut operating expenses by freezing all fresh recruitment, rationalize branches, shut unprofitable ATMs, and thereby achieve a higher ROA. It remains to be seen how much will succeed. All freezing of recruitment is not good. Sometimes you will need fresh recruitment either to protect the company from cyber problems or to bring advanced technological solutions to problems of fraud and leakages. But anyway, this is the plan that they have announced to bring the company out of the PCA parameters.
and get the gross NPA to below 6% by FY19.
Just one more addition. This is a story broken by my colleague Sapna Das from Delhi. She's unwell and I'm merely presenting her points.
Thank you very much for that. And the stock has moved up 2.5% on the CNBC TV18 Impact. A quick recap then of the top buzzing stocks. Glenmark Pharma, Cadila, Sun Pharma in the Pharma pack. HUL is dragging its feet today on the back of high valuations. Syntex Plastics, weak numbers. Weaker crude oil prices has boosted oil marketing companies like HPCL, BPCL, IOC, aviation companies like SpiceJet as well as Jet Airways, Som Distilleries, Adani Ports, Ajanta Pharma, Britannia and PNP also should be on your radar.
CNBC TV18 news break. The government has notified the maximum safe axle weight norms for heavy commercial vehicles. Ashwin Patel, the research analyst at LKP, he joins in on the phone line to give us his view. Hi Ashwin, thanks so much for joining in. Well, let's take two scenarios. One is that assuming it's implemented on existing fleet, and the second one that it's on new vehicles. If you could analyze both these two scenarios, what would the impact be?
The first one, as you said, on the existing vehicles, if it is implemented, as it is, we know that overloading has been there on the trucks, but it was unofficial earlier. Now it has been made official that you can overload your truck by about 25%. So that means that the demand which would be there for the new registrations would remain subdued, because the fleet operators would say that okay, my fleet is now existing and it is already capable of handling extra load. So why would I go for buying a new vehicle? So the existing fleet, since the government has said that the roads now, the infrastructure now are quite able to take that much of load, then definitely the operators will be at they will be in a sweet spot. But if it is implemented on the new vehicles, then they would be going to buy the new vehicles which would be bearing higher capacity, and that would spur demand for the truck makers. So first scenario would be negative for the truck makers, and the second would be positive.
Okay. In both these scenarios, what is your actual estimate of growth in, say, MHCV vehicles?
See, growth expectations I was having earlier, about 15 to 20% growth I was expecting for FY19, and on that high base, a slightly lower growth rate in FY20. But now, in first case, I think the growth would be impacted by about 4 to 5%, and second case would remain, the earlier assumptions which would I was assuming.
Okay, all right. What about stock picks? Ashwin, yesterday we saw a sharp downtick on Ashok Leyland. Now that stock is bounced back. We're waiting for the numbers. Interesting to see the margin picture out there as well. But your view on that stock?
I am positive on Ashok Leyland because I think that yes, this implementation has happened. It would be hitting the stock in the short term. But on the long term, since we analyze the stock, we continue with a buy rating. See, the results will be coming out today, and the call is tomorrow. So definitely, it is subject to what the management says. But currently, I am having a buy rating on the stock with a target close to 170 rupees.
Okay, target price, so 170 rupees. Let me come back to this whole overloading ban, etc. The overloading ban was already in place in states like Madhya Pradesh, Rajasthan, UP. What was the impact on the MHCV sales in these states?
See, state-wise, I don't have the exact data, but I would say that whatever demand we have seen, the spur in the demand over the past 6 months or so, about 50% of that I would attribute to this overloading ban. Now, with this, the recent statement that the government has made, I think that it would override the overloading ban thing, and if it's meant for the newer vehicles, then still it can exist. But if it's for the existing vehicles, then definitely the overloading ban would get overridden.
Okay, all right, Ashwin, before we let you go, what's the view on Tata Motors? It looked like it had value at 300, at around 10 times, 9 times. Stocks at a 52-week low. What's the outlook there? Do you think it's forming a base now? I mean, time to To buy into the stock, you're rating?
The stock was close to 272 levels and it was starting to look up, but with this news coming in yesterday, the stock has gone down to about 250. But I think that the MHCV business is a small contribution in the overall pie. So because JLR is the major contributor, this news should not hit the stock anymore. But the JLR positives, which would be like the new launches coming up and the hedge book reducing and any movement in the GBP on the positive side, that would be triggering the stock upwards. So I would maintain my buy rating on the stock with a target close to 400 rupees.
Okay, Ashwin, thank you very much for that. So negative for MHCV makers like in Ashok Leyland if the overloading rules are applicable to the existing fleet, and demand could get negatively impacted to the tune of 4 to 5%. That said, he continues to remain positive on Ashok Leyland and on Tata Motors. In fact, we'd also spoken to Ashok Leyland's MD and CEO Vinod Dasari on what this could mean for the industry. Listen in.
It is rather confusing at this point because somebody who has bought a vehicle, let's say for 25 ton, that vehicle has been designed for a GVW of 25 tons. The braking has been designed for 25 tons. If the argument that the government has that they are overloading that much anyway today, well, if they are overloading that much anyway today, then there should be no impact on vehicle volumes, because tomorrow they will say, okay, now you carry 28 tons and that would be all that you're allowed to carry, and it will be very strictly imposed. I find it a bit surprising on two reasons. One, somebody who's bought a vehicle today and somebody is going to buy a vehicle, let's say, after Tuesday, what does somebody who bought a vehicle do? I mean, he has a vehicle for 25 tons. He cannot suddenly get it registered for 28 tons because the brakes and everything have been designed for 25 tons. Even in US, one-axle truck or two-axle trucks have got the difference between India and US is 16 to 18 tons. Here we are going to 19 tons, which is the world's highest. Similarly, on three-axle trucks, we are going from 25 to 28. Once again, US is only at 26, which is the highest in the world. So we are going much higher than the world. And I am not sure our roads can take something like that.
All right, let's also get in some more reactions from Pradeep Singhal, the National President of All India Transporters Welfare Association, and Vishnu Mathur, the Director General of SIAM.
We are trying to reach out to the government because some newspaper have said that it will apply only to the new vehicles, but what I don't think that is kind of practical. There are two issues to this whole notification. One is that there is a more utilization of the same asset. So because of that, what will happen is that you have more supply than the demand. You're getting more supply, and because of that, the freight rate will come down.
I think overall I would say it is a positive move because in Europe and other countries more load is permitted in the vehicles, and I think the reason why we were not permitting so much load was because the road infrastructure in India was not up to the mark. This move has been done in consultation with the Indian Road Congress, and they have accepted that we can increase the load per axle load for various kinds of vehicles. So I think overall it's basically designed, this move is designed to improve the efficiency of the road transport, and with our increasing road infrastructure, I think that is quite natural.
Somebody has to tell in the government that after this hike they have suggested, what is the rationale behind it? How have they consulted all stakeholders? Why they have not come in the public domain and discussed the whole issue? So question is, will after this revision, the overloading will become zero tolerance or not? And this, as a government, we have information. They are only depending on penalties on highways by the NHAI or under the Motor Vehicle Act.